All right, welcome back to the Know Your Numbers REI podcast. I am your host, Chris McCormack, CPA, Certified Tax Planner here at Better Books, where it's our mission to provide value to you that helps you keep more money in your accounts. We know that most Americans are frustrated. They feel overwhelmed with the amount that they pay in taxes, the lack of good advice they receive, the miscommunications they have from their CPAs. So we want to eliminate all of that by providing you with vetted advice you can feel confident in so you can make more confident decisions, have clarity for your future, and provide for your family. So here today, we're going to be talking about the IRS's Dirty Dozen list. You might have no idea what that is, but it's basically the IRS's way of telling you, if you hear these things, beware, stop. Make sure that you vet the information you receive with a trusted advisor or the IRS themselves. The IRS's Dirty Dozen is a list of 12 or so schemes that they are eyeing, and they release it every year, and they have new schemes, and they have the same schemes quite a bit. And for those of you that don't know, before you go skipping through and say, I don't need to think about that. 4 years ago in 2020, when we were going through the pandemic, the IRS gave what is known as the Employee Retention Credit. And we'll talk a little bit more about it later in the show, but many people, if you had a advisor who was working for you and planning around and understanding the changing of the tax environment, they recommended this. Or if you were poached by certain third parties, they might come and say, hey, we have this great credit, the IRS vets it, we're allowed to do it, here's what you need to do. And what it did was it gave a lot of businesses who retained employees, so the Employee Retention Credit, you get a credit for retaining your employees, you could get a portion or all of what you paid in payroll taxes back from the US government. And it was this great thing. We had clients that did it and made back a lot of money. We had one who got $40,000 just in this alone. And I mean, that's what we do, is we want our clients to feel supported by us and to get paid back by the IRS. So we like the Employee Retention Credit, but what happened was there were bad actors, companies that saw this and saw it as a way to get rich and to make a buck. And it turns out that they filed a lot of false Employee Retention Credit claims. And now the IRS is going back and searching for the companies that claimed these. And if it's not accurate, if it was done incorrectly, they have to actually pay back what they owed. And if you know anything about the way business works, if you get money, chances are you're going to go put that money to work. And so a lot of these businesses put money to work and now they don't have any of it. And so what happened from a few bad actors telling people about this credit, which actually worked, but they didn't do it the right way, or they weren't looking for companies that were actually qualified. They just took people and filed false claims. Now those people who trusted them are forced to pay back money that they currently don't have. And so the message to you, the listener, the viewer, wherever you are, is that stay tuned. Like, listen to me as I share these things, and consider that some of these things have been introduced to you or will be introduced to you. I mean, I go through the list. There's a few of them where I'm like, yeah, we have had third parties tell us about that and come to us and try to team up with us. And so we want you to be aware, so that if you do hear about these things, you are aware and able to discern, or at least come to a trusted advisor and say, hey, I heard about this. What can we do? Is it possible? Is it right? What's going on? Because the fact of the matter is that some of these are definitely real verified strategies. The problem is that there are, again, bad actors who will see an opportunity to get rich and exploit that. All right, so we're going to jump into this. If you get any sort of value, give us a 5-star rating and review. Subscribe to our podcast, our YouTube page, all of it. It helps us so much. Again, our mission is to get in front of the eyes and the ears of as many people as possible, to provide them with the confidence they need, and we need your help. So if you like this, support the show by leaving us a review and subscribing. All right, the IRS Dirty Dozen. Number 1, offshore schemes, concealing money or crypto in foreign accounts. So what happens here is that the crypto, so Bitcoin, goes up astronomically, and people are like, how can I tap into this without paying a large tax bill? Because the IRS wants their share of that money. And what they might find, if they do some research and find this website that says, hey, do you have large crypto gains stored in this offshore account? Avoid taxes forever. And that is not how these things work. The IRS actually, on page one, the first page of your 1040, your personal income tax return, it asks a question about whether you have money or have opened any foreign bank accounts. And everybody who files taxes in the United States has to answer that question, yes or no. And we have clients that have to answer yes, and then they have to report the information about how much money's in that account, what do you use the account for, where did the income come from, all that stuff, because what happens is that there are, again, bad actors out there that will package up these offshore accounts as opportunities to avoid taxes or to hide money from the US government. But the government requires that you report it. And if you're found to not be recording truthful information on your tax return, you're opening yourself up to penalties, fines, interest, and quite possibly jail time. And so what you need to know as you think about offshore schemes, one, if you have offshore accounts, if you have accounts in other countries that you're storing money in or investing with, you have to report that information to the IRS. And two, if you get approached or if you find in your research that there's this great opportunity to save money on taxes by putting your cryptocurrency or your stocks in this foreign account, please know that that is not a strategy. As a United States citizen, as somebody who generates income and lives in the United States, all of your money is going to be taxed in the United States and you will have to pay taxes. Now, you do get a credit for taxes paid to foreign entities. So there is an opportunity. You're not going to be double taxed on money that was taxed in Australia, for example, and money in the US. Like, they will cancel each other out, but each country is going to want their fair share of that money. And so you do have to report that information. Beware of the offshore schemes. Number two, improper art donations. So what happens here is that there's third parties, again, people who find these loopholes in the tax code and they create a business out of it. This is what we saw with the employee retention credit, is that they create a business and they have a target market of people who make a certain amount of money and need deductions. And so what they have is they have this producer or this provider of art, and there is a part of the tax code that allows you to deduct donations of art. And so again, it's using something that is legal and twisting it just enough to make it illegal. And that's what you have here. Rather than donating art at the actual value, they say, hey, we have this producer or service provider or product provider that has a whole inventory of expensive art. And what they do is they can sell it to you for below market value. So say you have a $300,000 piece of art, you buy it for $100,000, hold it for a certain period of time, usually about 12 months, and then you can go and donate that piece of art. But what they say is that you can donate that piece of art at the fair market value. So you bought it for $100,000, it was worth $300,000. Over the course of time that you held it, it probably went up another certain amount of dollars. And now you donate it and you get a $300,000 to $400,000 write-off, even though you only paid in $100,000. So it sounds great. It's like, yeah, sign me up. Like, I'm paying $100,000 and I'm getting $400,000 worth of a deduction, but the IRS is looking for it. The IRS is disallowing it. It's not possible. You can't buy below market value and then get the donation at fair market value because of related party transactions and just the fact that it's not, the IRS doesn't want you doing it. And so if the IRS doesn't want you doing it, they're not going to allow it. And there are rules and laws to say no to that. So for you as high income earners, if you are approached by some of these third parties that say, hey, we have this charitable art donation, you only have to pay in $100,000 or even $25,000 and you can get $50,000 worth of a deduction, that's your red flag. That is not a strategy that's going to stand in the face of an audit. The IRS is going to look at it. Like, literally, if you say that you donated $400,000 worth of art, they're going to come and audit you. I mean, I can't say for certain, but this is the dirty dozen. And this basically what this means is that these things, these 12 issues are ones that we're looking at very keenly. And if we see it, we're going to come look at it even harder. And so the donations of art at a escalated value or buying art at a lower value and selling it at the true value isn't going to fly in the face of an audit. Number three is what they refer to as spear phishing. And I do believe that this is a pun and a play on words. Spear phishing obviously is a sport that you can play, but spear phishing, phishing spelled Phishing, basically saying like there are poachers out there that are going to be coming for you to release sensitive information, and they're going to portray themselves, disguise themselves as somebody from the IRS or the tax relief organization. And so the warning to you is that if you have somebody that's calling you and saying that, hey, you're behind on your taxes, or we have this great strategy, what you need to do is raise the red flag, hang up the phone, and understand that they're looking to get sensitive information. Because what they'll do is they'll call you, they'll tell you that either you're behind on your taxes or there's this great opportunity to save on taxes, and all we need is a credit card or a bank account information or social security numbers. And if you didn't know any better, you'd give it all away, and then they'd run away with all of your sensitive information. Your bank accounts would be drained and you would have identity stolen. And so for you, the listener, please know that the IRS will never reach out to you. And number two, if you have somebody that's calling you saying that they have this great tax strategy, well, that's usually a good sign that you should be reaching out to your tax planner, your CPA, your certified tax planner, to make sure that one, if it is a legitimate strategy, they're aware and can point you in the right direction. And number two, if it's not a legitimate strategy, you have that boundary in place and they can't poach you. If you don't get anything out of our podcast or videos, the number one thing I want to make sure that you get is have a relationship with somebody that you can trust, that you can call upon, that you can know is in your corner, is going to be looking for those strategies. And for any of those bogus strategies, they're going to know, hey, that's not something that we're going to pursue. Number four, social media tax tips. Can you believe it? They have social media tax tips on the IRS Dirty Dozen list. And I love it. I think there is such a need for us to be aware of tax ideas that come on social media. Social media is a great tool, and I use social media to promote tax strategies and tax saving and ideas to build wealth and save on tax and pay less to the US government. But there's so many people that have the same approach, but spread information that is not going to line up. And then what happens is that they build these massive followings. I've seen people with views of 7, 8 million on their Instagram reels, and it's advice that's either inaccurate or incomplete or just not appropriate to people that now they say this is what everybody should do, is get somebody on your board of directors and put your family on and go to Disneyland and write off your trip to Disneyland. When in reality, that's going to be something that's going to raise a red flag. And there's certain guidelines that the IRS has already put forth that we need to follow if we're doing something like that. And the one in particular that the IRS points out on this list is the fact that there were people on social media, Instagram, TikTok, that would file fake W-2s. And they would use those fake W-2s. So those that don't know, W-2 is the information you get about your paycheck, how much money you made and how much taxes you paid in a given year. They filed fake W-2s under a fake or a real business. I don't know what it was. But with these fake W-2s, they'd then go and file a tax return with false information. So they said that they paid $100,000 in taxes. And then by filling in their actual information, maybe it turns out that they only had to pay $30,000. And so they now have a $70,000 refund. And what happens when you file that information is the computer looks at it and says, yeah, okay, we see the numbers. It makes sense. $70,000 refund. So in theory, you can get a $70,000 refund by doing this strategy. And for those that aren't looking, I just put strategy in air quotes, but in reality, you are falsifying information and you are taking part in a fraudulent activity, filing false tax returns, and now you're facing penalties, interest, and jail time. And so when they warn against social media tax tips, they point out this one specifically with the false W-2s, but also know that you getting information from social media or even this podcast, if you're not a paying client, you cannot rely on this as this is the information that I use to implement this strategy. You have to have an advisor that is also standing with you. Otherwise, they're going to throw it away. You're going to be like a fish out of water dealing with the IRS on your own. Number 5 is untrustworthy tax preparers. They also said ghost preparers. So what happens in this regard is that they will, come tax time, everybody's running around trying to find a trusted tax preparer. And so you'll find these guys, either they have a website set up or they will call you specifically and they'll say, yeah, we can plan for taxes, prepare taxes, project taxes. Like, it'll be everything. We'll do everything you need and you can just pay us this amount. And so you pay them because it sounds great. And then 3 weeks go by, you don't hear from them. 6 weeks go by, you don't hear from them. 2 months go by, you don't hear from them. And it turns out that it was just a complete sham. And what sounded like great, my taxes are going to be prepared, I'm going to plan for taxes, I'm going to project taxes, I'm going to get everything that I've been looking for, ends up being run by somebody who's not a CPA, not a tax preparer, not a tax professional. And now they have their money, they ran, and you're out of luck and without a prepared taxes and without a tax planner. And so what you need to do as the taxpayer is, before going into a relationship with somebody, vet the information. Make sure that you look up the CPA's credentials on their state website, right? You can look up on the state of Minnesota website, the Board of Accountancy, my CPA credentials. It'll say that it's in good standing and it's active and he's who he says he is. I've had prospects do this because it just builds trust. And I've also had prospects and now clients who have had the others happen, where they went with somebody who said they were a CPA and they later found out down the road that it's not a CPA and they either offshore it or somehow get taxes prepared. I don't know what ended up happening, but this is something serious and you want to make sure that you are getting in business with somebody that you can trust, and you can do that by vetting the information that they provide. Number 6 is fake charities exploiting taxpayer generosity. So just as there are fake CPAs exploiting the need to prepare your taxes, there's fake charities exploiting the tax code, which says you can write off charitable deductions up to a certain level. And they say, just give us a certain amount of money, you can write it off, you can support this great organization. And then it turns out that it's not a great organization and it's actually not an organization at all. And so again, vet the information that you receive. They said that it actually picks up, these fake charities pick up in times of distress or natural disasters. So Hurricane Helene, Hurricane Milton came to the southeastern United States. And I don't know if it actually happened, but in this event, what the IRS is saying that we need to look out for is that when that stuff happens, when Hurricane Helene hits, when Hurricane Milton hits, beware. There are people that will come onto the scene and say that they're this great nonprofit. They're going into the fire and into the hurricane and going to help people and support people and bring food and shelter and all these things. And then it turns out it's not a true nonprofit. And so that money that you gave, not only can you not write it off, but you can't get it back. And so understand that when it comes to charities, just as you will verify my CPA on the State Board of Accountancy website, you can verify the nonprofit status of any charity in their state and see, is this a true 501c3? Is this actually a nonprofit doing work for nonprofits? It's an easy way to avoid number 6, which is fake charities exploiting taxpayer generosity. And we're all for generosity. We think that you should give to charities that are vetted and that you know the people involved and that you know they're doing good work and you see the results, because we know that giving blesses you. We know that with giving comes great joy. And Jesus of Nazareth even said it's far better to give than to receive. Like, there is something to giving in the spiritual realm. You're able to reap the benefits. So we're all for giving. We just want to make sure you're giving to the right organizations, because giving to a fake charity is not going to bless you. It's going to come with great anger and animosity and bitterness, and we want to avoid that at all costs. Number 7 is offer in compromise. So offer in compromise, I guess, is them releasing your debt. So this might be a tax debt or any debt in general, but the IRS is warning us of bad actors in the offer in compromise. And so what they will do, these organizations or fake organizations will come onto the scene, see that you are an individual who's distressed, you have a lot of debt, whether it's with the IRS or not, and they'll say, hey, we can get you out of that. And you just have to pay us a retainer, or we'll get a certain amount up front and collect a certain amount afterwards. And they will then take your money because they're not going to do it. And so if you're in those debt relief programs or considering debt relief programs, again, go to a vetted source. We've seen this happen. Certain people have gone to a debt relief program and then come to find out that their debt's not being paid down. They can't get in touch with the people. That's usually a red flag. And so the number 1 piece of advice I can give you is to avoid debt. Avoid the costly debt like credit card debt. And that's probably the biggest one. Car loans are another one. Avoid tax debt by planning and setting aside for the future and doing what you can to pay less in tax, tuning into our podcasts and staying up to date with this stuff. And then if you do find yourself in one of those tough situations of extreme burden of debt, go to vetted resources. There are good debt relief programs. We have some here in network. Dave Ramsey is like none other. So go to him and start following him along. But just know that there are people out there that will try to take advantage of you in your distressed time. So number 8 is false fuel tax credits. Fuel tax credits are great. They can offer you some great opportunity to save money, to invest in alternative energy or even oil and gas in general. And then they'll promote it as being it, but they're not a vetted organization. They don't do what they say they're going to do. And so what you need to do with any of these, with any tax strategy that you hear about, 1, vet it with your trusted tax professional, and 2, make sure that you're going to trusted sources, right? Ideally, you can go to your tax professional. They say, yes, this is a great strategy. Here's who you should go to. Or no, this is a bogus strategy. Avoid it at all costs. What you don't want is to have somebody call you and say, hey, we got this great strategy. We see that you are a perfect fit. Just sign on the dotted line, give us $50,000 and we'll take care of the rest. That's obviously not what you should be doing. But also you shouldn't be seeing this and seeing that anything to do with any of these is a bad idea. Fuel tax credits are great. Charity is great. Getting out of debt is great. All of these things can be good, but you need to make sure that you're vetting it properly. Number 9 is scammers setting up online accounts, taking advantage. They're asking you to pay to set up an online account. So it could be an online tax account. Again, this is something that you should be aware of, and this will come back to in the phishing, but we talked about it in the spear phishing, is that the IRS will never call you. They will send notices. And so if you have somebody that's calling you and saying, we can get your account, your tax account set up online so everything's taken care of, that is a red flag. We're from the IRS. Like, the IRS has specifically said they will not call you. And so if you're getting calls from people that are saying, hey, we see that you're late on your taxes, you can hire us, give us this sensitive information, usually a red flag. I get these calls. I get spam calls on a regular basis. Voicemails left for me from somebody from tax relief organization or tax free USA or something like that. Like, it's these crazy things, and I don't answer them, but I know that we're not all that fortunate. Like, sometimes we do pick up the phone and it sounds good. And so just be aware that these are things that the IRS is warning us about, and we need to take seriously. Number 10 is employee retention credit. So they're still looking into this. 4 years later, they're still looking into it, going after people for falsifying information. If somebody's coming to you with the employee retention credit now, don't go forward. The IRS has actually put a pause on employee retention credit. So please do not take any steps with anybody who's saying that they can do this for you. Secondly, statute of limitations, I'm pretty sure, has come or is coming up. And so if somebody's approaching you with the employee retention credit, please know that it's not something you want to be involved in. They are not allowing any new credits, and even those credits that have been paid out, they're going and looking into even more, and a lot of people are losing a lot of money. And the last one is phishing. So again, this goes back to the fake information, the scammers. Just be wary, all right? I think more than anything, this tells us that human nature has a proclivity to go towards wrongdoing and evil and bad things. And what the Christian faith says is that human nature goes towards sin. And so what I see here is that this is proof. There are people that are taking good things, things that are legal and ethical and allowed and put there to incentivize us to do certain things, and they're distorting them and they're corrupting them and they're taking advantage of others. And so for you, wherever you are in your faith journey, know that this is all described in the Bible, which says that we have fallen from God. We have lived in disobedience. We have gone our own ways, and it is a way that leads to destruction. It destroys humanity. It ruins your fellow neighbor. And the only way to reconcile ourselves through that is through Jesus Christ, who died on our behalf, paid the debt that we owed. And while you might not be a scammer or somebody who's taking advantage or stealing from another person, just know that he's a holy God, and he requires the holiest of people to come to him, and none of us can accomplish it on our own, and that's why we need Christ. And so I say that because I care for you, and I want you guys to all understand that. Like, you can read this and grow you can start to have this distrust develop within you and grow skeptical of every person you see, but understand that this is just a way of the world, and we have to be on guard. And I trust that this is useful to you. Again, the biggest takeaway you can have is you can understand that some of these are legitimate tax strategies, and we use some of them for legitimate tax strategies, but people are distorting them and taking them out of context and using them to their own advantage and to your disadvantage. So beware. I trust that this was useful for you. So if you have any questions, feel free to reach out to me on Instagram, Facebook. I believe there's a comment section here in Spotify, and YouTube obviously has comments, but would love to hear from you. And if you are frustrated or worried or concerned about your taxes or the strategies that you've taken, please don't hesitate to reach out. We do offer a free 60-minute consult for any prospects who want to come in the door. We review your tax returns, identify any mistakes or missed opportunities, and ultimately see if it's a good fit for us to work together. This is the Know Your Numbers REI podcast. I'm Chris McCormack. Until next time, God bless you and keep moving forward.